The last topic in question I always get is rates are so high right now. I'm just going to wait till rates come down. I can't afford with these seven. They're up in the sevens right now. I just can't afford it. There are different options to bring down the rate as well.
Yeah.
As low as down into the fours, I believe, right now.
That's right.
So what kind of options do we have as far as trying to get that rate down?
Yeah. So affordability is the hot topic in our industry right now, right? In the housing market. It's the biggest challenge we all face, how to combat affordability. And I think a lot of people, the first thing that comes to their mind is the way I can drive my cash to close down, my closing costs, right? My payment is to get a price reduction. And you and I know that that's not always the best strategy. Personally, right now in this higher interest rate market, I think you are, so much better off rather than asking the seller to reduce the price, keep the price where it's at, or maybe ask for a little bit less of a price reduction, but ask for credits. So seller concessions or seller credits. So the seller, depending on the loan program that you're getting, they can contribute, 3% on like a conventional loan with 5% down, right? If you put 10%, you can go to up to 6% of the purchase price. So for example, on a $500,000 purchase price, if you got a 3% credit, that'd be $15,000 that the seller's going to essentially give you at closing to cover your closing costs. Now that can combat affordability from a cash to close perspective. But if I've got enough cash and the biggest pain point is the payment, what else can I do to help combat affordability? Well, we can take a look at a couple of different buy down options. So there's a permanent interest rate buy down, so meaning for the life of the loan, for the full 30-year term, right? That interest rate is bought down permanently lower with the seller's dollars. Now, it doesn't move a ton lower with the seller's dollars, but what would move it even lower would be a temporary interest rate buy down. So you could do this on a conventional loan or an FHA loan, right? And several other loan programs as well. But speaking to just traditional loan types, you could do a 2-1 buy down temporarily, right? So for the first year, your interest rate's 2% lower. For year 2, it's 1% lower. So for example, let's say your interest rate, just for, easy purpose rate, 7.5%, right? So you're going to lock in 7.5% on a 30-year loan. Well, on a 2-1 buy down, you're going to get the seller's credit at closing, right? And the dollars are going to get held into a reserve account. And then each month moving forward for the first 2 years, a portion comes out to help subsidize your interest. And that's what it is. It's an interest subsidy that's paid for by the seller for the first, 2 years. And so in year 1, remember your interest rate's 7.5%, and it still is, but they're going to pay the difference between 5.5 and 7.5. So each month a portion is going to come out to cover the difference in interest. Then after the first year, your rate that you're going to be paying on is going to be 6.5, right? But your actual rate is 7.5 still, right? But the seller is going to subsidize that 1% difference in interest for the year 2. And then after year 2, it would adjust up what you're paying to the 7.5 for the remaining 28 years of the loan. Now, the beauty of the temporary buy down, a couple of different things, is that it's temporary and it's going to really drive that rate down significantly lower than it would be on a permanent interest rate buy down. But the cost of that buy down, it can only be paid for by the seller on the temporary buy down. That money gets held in the reserve account, kind of like for your taxes and your insurance, the escrow account, right? Well, let's say in 6 months after you close, rates drop, rates are in the 5s, and it's time to refinance, right? Okay, well, we're going to go ahead and do the refinance, but whatever's left in that reserve account is going to go right onto your principal balance, pay the balance down lower. So when we go to refinance, you get essentially a price reduction at that time. If you do anything with your loan, if you refinance or even sell the property, whatever's left of the seller's dollars goes right onto your principal balance, pays that down lower. So I get a interest subsidy for the first up to 2 years on the 2-1 buy down. And then also if I refinance or sell in the first 2 years, then I also get those dollars applied to my principal balance, which is going to help reduce the principal balance when I go to refi on the new loan. But not only is there a 2-1 buy down, there's a 3-2-1 buy down. This is what you kind of mentioned earlier, getting rates down into the 4s. So again, same example. If you're on a conventional or FHA loan and your rate is 7.5, you get enough funds from the seller to do a 3-2-1 buy down. So for year 1, you're going to be paying based on 4.5. Year 2 would be 5.5, and then year 3 would be 6.5, and then after year 3 would adjust up to the 7.5. Perfect.
Yeah, and you mentioned the seller pays for this, right? So I know a lot of your buyers like, why would a seller pay for that? He just sell his home. Why would I want? How am I going to get a seller to pay for this?
Right.
Well, with today's market, homes are sitting on the market longer. There's not as many buyers out there, so sellers are more willing to contribute to get that home sold. Usually we would go in there in the past, we'd go in there and we'd do a price reduction. Hey, let's lower it down 20,000, see if the seller will take it or whatever.
Yeah.
In the past, that's what was traditionally how we did things. But now we say, instead of lowering the price, the seller, please buy down my rate. And it's a very good possibility. The seller's going to say, yes, I need to sell my home. What can I do to help you?
A lot of sellers are also buyers. And so they may be relocating for a new job somewhere and they got a deadline, right? Like, I've got to sell my home by this date in order to move my family to the new, city or state or wherever they're going, right? To start that new job, to where they're a little bit more motivated. And if their property's sitting, we're seeing a lot of listings, right? Advertise that the seller is willing to credit 3% of the purchase price towards a interest rate buy down, whether that's permanent or the temporary. So yeah, we're seeing it just advertised on the listings, right? And here's why. And I mean, I'm even seeing listing agents where they're charting, like, here's what a price reduction would look like, but here's how much more affordable I can make it for you, and or your buyer, if you're the buyer's agent, right? If they do the credit instead of a price reduction, and they do a temporary interest rate buy down, here's how much more affordable the home can be for them.
So if over the lifetime of the loan, a price reduction, you don't get as much bang for the buck as if you bring that rate down.
That's right.
And you get more bang for your buck. And
yeah, your seller credits can impact affordability 400 to 500% greater than a price reduction would with those same dollars. So the seller, if you're going to ask me for a $15,000 price reduction or $15,000 credit, to me as a seller, it's all the same, right? I'm going to net the same on the sell as if I gave you a price reduction or a credit. So
yeah, and buyers are always saying, I'm just going to wait till the prices of homes come down. How long have you been in the business?
18 years.
18 years. Over the 18 years, has it pretty much always goes up, right? I mean, you see your little ups and downs.
You'll see a little bit, but I mean, over the last 81 years, since they really started charting this, homes have appreciated 73 out of the 81 years. They've had 7 down years in the last 81 years. So 73 up years, 7 down years, and 1 tie, meaning that homes didn't appreciate that year. So to kind of put that in context for some individuals here, it might make more sense this way. So in the NBA, they play 82 games, right, a year. The best record in the NBA is 73 wins and 9 losses, right? Well, in 81 years, real estate's already got a better winning percentage than any NBA team in history, right? Any WNBA team in history, right? So real estate, betting on real estate is a good bet because of the in most cases, it's not a short term, get rich quick, right? It's buy and hold. So, I mean, if you're going to be somewhere for a year, it might not make the most sense to buy, but if you're going to be there 2, 3, 4, 5, 6, 7 years, it makes sense to buy real estate because of the appreciation and the amortization of your loan, right? Paying down that loan balance while my home value is going up, my balance is going down, creating net worth there that now I can leverage that in the future to buy other real estate or other investments. Right?
Yeah. So if you're waiting for those home prices to drop, I don't know, nobody's got the crystal ball.
Right.
It's, like Matt said, over the long term, it's the best investment. Yeah. Very,
very consistent, right? And I think just a lot of folks that are a little hesitant to get in, think about, the 7% interest rates right now, right? And that I'm a 30-year loan, I'm going to be locked into this forever. Well, no, you're not, right? If you're partnering with a good lender, they're going to help you monitor and manage your mortgage. And that's what we do. We've built an AI system at NEO that monitors our past clients' mortgages 24 hours a day, 7 days a week, and bells and whistles start going off as the market adjusts, right? So as interest rates come down, we're sending out notifications to our clients. We're calling them, we're texting them, we're emailing them, right? Letting them know, hey, you need to pause. Let's take a look at the numbers and see if a refinance makes sense.
Yeah. So buyers, again, saying, let's wait till rates come down, and then prices come down. Wait till prices come down, then I'll be in a better position. But or rates. But you remember what it was like 2020, 2021, right? Rates were 2s, 3s, 4s. Yep. My goodness.
Historic lows, right?
We've never seen anything like that. And unfortunately, that was kind of the taste everybody got, and they think that's the normal now. It wasn't the normal. That was just a fluke kind of thing that happened. And we're kind of actually in the more normal range right now. Historically, we're in that 7. But if you do wait for rates to come down, what happened last time that happened, right?
Yeah. So when
Buyers came out and you were
right.
doing multiple offers, and you don't want to get into that situation again.
Yeah. So right now we're still at limited inventory, and there's still a decent amount of demand out there that people that can afford to buy now or are not afraid of the higher rates because they understand that, hey, in the future I'm just going to refinance it. So there's, we're still seeing, multiple offer situation, but not as much as we were seeing back in 20 and 2021. It was all out bidding wars, right? Yeah. And so right now with the higher interest rates, it creates opportunity for buyers, right? So for, example, back in 20 and 21, zero down buyers were like getting pushed out of the market because home values and prices were going up so fast that appraisals couldn't keep up. So I guess let me kind of explain that there was so much demand because it was so cheap to buy a house because interest rates were so low that there was just an insane amount of demand. Well, supply was getting gobbled up. We didn't have a lot of supply, so it was all out bidding wars. People were paying more than the home the seller was asking or the home was worth. And so to a seller, if I've got 10 offers, somebody comes in with a zero down loan, that tells me they probably don't have a lot of money. So if the appraised value doesn't meet their offer, the sales price, then they're not going to have enough money. If they don't have money for a down payment, they're not going to have money to bridge the gap between the value of the home and what they offered to buy it out, right? Well, there were so many buyers that are like, yeah, I'm putting 10% down or 20% down or whatever, and I've got cash in the bank. People were just paying cash over appraised value, and so again, it was kind of pushing out those zero down buyers or lower down buyers because they didn't have a lot of money to bridge that gap between a low appraisal and the sales price. So right now with the higher interest rate and a little bit less demand, it's a great time for zero down buyers, right? Because they can come in and negotiate with a seller and get their offer approved, lock into today's price, as opposed to waiting until interest rates drop and then there's a feeding frenzy in the market.
And prices go up.
And prices are going to go up, right? So if we wait for interest rates to come down, prices are going to go up. Because of the demand, it's going to spike. It's estimated that for every 1% lower mortgage interest rates go, that opens up 5 million households that can buy.
That's a lot of people to compete against.
People to compete against, and we don't have the inventory for it.
And not only are you competing against other buyers, sellers aren't as willing to help you out with closing costs or buy down a rate. So right now I know it sounds weird, the rates are high, but it is actually a great time for the zero down buyers, non-cash buyers. And then when I was helping clients back in 2021, we were getting pushed out by the cash buyers. Yeah. Cash buyers came in and just took everything. And I was getting frustrated myself trying to help these buyers that just didn't have the cash to do that. Yep. So if you're in that situation now is the perfect time to get the home.
Be really creative with offers, get in with zero down, and then have the seller help cover your closing costs and or an interest rate buy down to help subsidize your interest payment while we wait for the market to adjust. And that's kind of the target range is anywhere from 12 to 18 months. And again, no crystal ball, but that's the expectation for rates to start moving lower. It's the next 12 to 18 months. So a great way to kind of wait that out in your new home. And then once rates do drop, at NEO, we know it's a two-part play when you buy now because you're in a higher interest rate that you're going to have a lot of opportunity in the near future to refi. We're going to waive our cost, do a free refi for you just to get you into a better loan situation at that time. And
the one thing I did when I bought my home was we were looking for a place that had the mother-in-law suite. And I know a lot of buyers are looking for that as well to help pay, you rent out the basement, someone helps you pay off that mortgage. And that's what we did. Me and my wife did that. We have our basement and we have a mother-in-law suite down there. And I know other buyers that are looking for that. And if you're a seller and you have one of those and you're ready to sell, those are hot. Let me know. We can get that one sold for you.
Yeah, they are. House hacking, I think a lot of people call it, right? Is that you're going and buying a property and you're going to rent out part of that house to help you cover the mortgage payment.
Yeah. So, or even if it doesn't, if it's able to put something in, you can put a kitchen downstairs or something.
Yeah, unfinished basement, finish it out and build out a little mother-in-law apartment and rent it out.
So I hope this answered a lot of questions for you all on these rates and credits and down payments and all that. But if you have more questions, you can contact myself or Matt. I'll leave our contact information down in the description. But thank you again for watching this. And if you have any questions, you can also leave them in the comments. Don't forget to subscribe, hit the like button, hit the thumbs up, leave us a comment.
Yeah, please comment because helps us answer your questions next time around, right?
Yeah, I know you guys have a lot of questions, and it's a scary time, and it shouldn't be a scary time, but that's what we're here for. We're going to guide you through the process. If you're ready to buy or thinking about buying, or I've got someone that says I want to buy, but I'm going to wait till next year. At least come get your numbers run. Let's see which kind of game plan you should be on, what path we can put you on to bring your credit scores up, to bring your debt to income ratio down, to get the home that you want.
Yeah, and that way you're not, out to sea without a paddle or a heading, right? That way you've got an understanding of where you're at and a heading, a direction of where you're going to go and how to get there, the steps to get there. That's going to remove any doubt and just put you in the best place possible when the time is right to buy.